Boom. All right, guys. What's going on? It's Josh Answers from the Trading Fraternity. If you guys like this video, make sure that you subscribe and actually hit the like button. Please, por favor. And also, even turn on post notifications if you guys subscribe to make sure, there's new videos every day. But most of you already know that. A lot of you are already watching these. So what I want to talk about today is level 2. What is level 2 and how you could use it both in trading stocks as well as trading options. Now, level 2, I get asked this question a lot by beginners. Most active traders already know what level 2 is. However, what I am going to show you guys, this will be probably a very brief video, but I'm going to talk about how I use level 2 and little factors I look at to go about it. So starting off, what is level 2? Before we understand what level 2 is, we need to understand what level 1 is. That seems kind of intuitive, but here it is. Here's like Yahoo Finance. There's a basic stock quote. When you guys see a basic quote, you see the bid 143x 100, ask 143.26x 200. So this is a level 1 quote. It's showing you the highest offer to buy and the lowest offer to sell right now. These are just the first available. Highest offer, lowest offer to sell. This is a level 1 quote. So right now, when we see, this is an option here. Let me go to the SPY. If we go right here on the SPY, I think I gotta turn on. That's weird. I had it just showing up, but that's kind of annoying. But even then, I guess we could use view the option chain here. I think it's because it's late. Again, hopefully you guys see I'm doing this video at 12:37. But this would be a level 1 quote, just seeing the lowest offer to sell and the highest offer to buy. So, and another thing too, when you see this, when it says times 100, this is showing you the size. So this means on the bid, someone's willing to buy 100 shares at $143. Somebody's willing to sell 200 shares at $143.26. That's a level 1 quote. This right here is a level 2 quote. This little thing is when you see beyond just the one thing for sale. So here again, the market is closed, so we're not seeing it active. It sucks because I just had it pulled up. Let me see if I could get it on another company. Let's see. No, killing me. It was just up. That's unfortunate. But as you see, we go with any other option here. You'll see. So here's a good example. Now you see two different quotes, the 490 and 510. Obviously, this is the highest offer to buy. There's one below it for 250, and as you see, that one goes below it, and then there's a higher order to sell for 750. So the whole idea is to see what orders are in place and what type of offers there, and you can kind of see where a lot of orders are stacked up. I wish the market is open, but what I use here is the depth summary, and you could, the depth graph. And you can kind of see a visual, and it lets you know where price levels, where a lot of sellers are organizing and where buyers are. And really, the base concept of how to use L2 is to see supply and demand. Really, when I use this little graph here, so you turn on the depth graph, it should be more active. I wish, again, I'll try to show one when the market's more open, but when it is open. But when you see here, like this bar is a little higher than here. So what we're seeing is there's more offers for sale than to buy. There's more option contracts, adding up all the size. So it's showing you there's more selling demand than demand to buy the stock. So that could mean it is going down. For those of you who aren't familiar with E-Trade, if you ever want to pull up level 2, you go to Tools, and then it is called Market Depth. And then it brings up this. So they call it, again, L2 is kind of the slang name, why it's called Market Depth, because you're seeing where the market is, going deeper. You're getting depth to what orders are there for sale. So in this case, you're getting to look at what orders are, there. And really how you should be using this is simply supply and demand. It's to see what orders are levels, and how I use it when I'm trading stocks, even when I'm trading options. I look at the level 2, especially, I think a good example of what was a stock that I played the other day? Whole Foods, WFM. They had their buyout rumor a couple days ago, and this is what was happening. And really a good point to see, it was coming down here, and then I started noticing the L2. You could see when orders are stacking up, and then you could see when buys are going in and where there's levels of where it's pretty much going to help you identify breakouts. I don't use it all the time, but it's good to see where the demand is stacking up and where the selling demand is stacking up too. So I use it just to understand basic supply and demand and see stuff real time, and I'm someone who looks at 1 minute charts as well. But again, not always to just day trade. But then another aspect of how you could use these charts is to kind of see their level twos, to see the liquidity. And I'll even give you guys a tip here because with options, let me pull up. I had a pharmaceutical up because how I would use something like blue or something like level 2 is when I'm looking at the level 1 quote. These are options with large spreads. So take a look here. These puts are 40 cents. That's 100% different here. 160 to 260. 50 cents to 45 cents. These are large spreads. So what you can do is look at the level 2 and see and notice a pattern. So like in this case, it seems to be what? 30 to 40 cent spread minimum, a lot higher here, as we get towards the money, again, and these are $5 increments. That's why it's probably like that. But let's say average 50 to 80 cent spread. That seems to be the norm. I go, and that's why I have my level 2 up here, because sometimes, especially if there's like a buyout and you guys will see the stocks go to $4.80, you'll see it a lot. What you should look at is to see if you see, like, let's say out of all these, let's say this is a 20-cent spread or 40-cent spread, 40-cent spread, dollar spread, 40-cent spread, whatever, the average is there, but then you see one of these on the level 2, it tightens up and it's now like a 10-cent spread or a 5-cent spread. You look at the level 2 and start to observe the size, because the computers, they're coming in with these big orders and these big blocks. So if you see the spread tighten up, that's somebody bidding on it. And a lot of times that can mean showing active interest. And what I'll do sometimes is I'll buy it at the ask because they're bidding $5, $10 below. And then if there's a little bit offered on the ask and the stock keeps going in that direction, boom, you sweep the ask from them. And now that it's going to go up 30, 40 cents and they might be willing to buy it, you could sell it right back to them, or you could at least guarantee someone is going to buy after you for a higher price. So how I use level 2 when it comes to options is especially for pricing. I'm trying to see how liquid they are, and I'm observing what price levels come next. And that's too to help me decide, should I get into the option right away or should I wait and try to get a price, is to see what orders are coming next and at what price level. So this one, I would be inclined to get into it if I'm seeing, obviously that's weird because it's showing $80 on the ask here. But it shows 110 here. But then again, if I can't get it for 80 and I know it's going to go up 30, 40 cents, I'm going to start to make my decisions on maybe I should try to get in, or if those spreads are too high. Honestly, I don't really like too high of spreads. I would try to start factoring in what price levels are next and what I could expect, especially also too on the bid. I would observe the spreads going through on the level 2. But this is pretty much in a nutshell how you could use it for options. And again, the simplest thing to use with level 2 is understand supply and demand. And understand that, right here, there's more buying demand than selling demand. It's not going to always work like this, but in theory, you could expect the price to go up, especially when you're looking at the stock. You're getting less demand here at 145, but then when you come over here at this 175, that's where you're probably going to see some resistance. And that's how people use it. That's how technical people use it. Does it work all the time? No, but can it? It can at least give you a better idea to see, yes. I guess the only dilemma is that at any minute this stuff could change. Anybody can put in another order. These computers, and a lot of time, that's what we call spoofing orders. Computers will spoof orders. They'll put out orders and they'll say that they're gonna, they're putting big orders here, then they'll pull them away, and vice versa. They'll put bids on there and then pull them away very quick. So don't rely on it too much. The best thing to rely on here is the tape, is seeing the active transactions that go through. Because what I tell people, level 2, these are all hypothetical. This is like eBay. These are all simply just offers. These are people saying, hey, I'm willing to buy 10 of these options for 40 cents. Somebody else saying, I'm willing to buy 5 options for 40 cents. Another person saying, I'm willing to buy 10. Other person saying, hey, I'm willing to sell it for 110. I'll sell one of them. Someone saying, I'll sell 10 for 110. But these are all hypothetical. Just because you see these on here does not mean the trade will go through that much. And quite frankly, it doesn't mean that's what the option or the stock is worth. The option or the stock, and that's something, why we call it level 1 and level 2 pricing, because the interesting thing I always bring up, and I always tell this to the pledges and brothers, you guys will notice, here, you don't really see the word price. I'm trying to find, I think you could find it on one or two places it says price, but try to find price here on the screen. It'll say it maybe once or twice, And that's, right here when you're putting in your bid, that's the only time you'll see price. Why? Because stocks don't really have a price. You see here, it says bid, ask, and then last. It's because stocks are valued based on what the last trade goes through. Stocks are not based upon their inherent fundamental value. They're based upon what people are willing to pay for them. So that's why level 1, level 2, and the bid and ask is so important, because when your trade goes through, that is essentially letting people know what the stock is worth, but it doesn't necessarily mean that's the price of it. And that's why it could change in any minute. And especially when you're looking at options, that's why you got to be very careful. The level 2 analysis can help when it comes to option trading, but what you have to be careful of, options are so volatile and could lose and gain value so quickly. You could watch these level 2s just dump. And I guess that can kind of leave in another thing. We already have a video on it. If you go look through the tutorials about understanding, order flow and options flow, but that's part of it as far as it goes to options. But I'll leave it right there. Hopefully that explains a lot about it for you guys. If you guys have any questions, again, let me know. I'm actually running out of video ideas. As you see, I'm making these videos here at 12:50 a.m. So give me some ideas. Let me know what you guys want me to talk about, what topics we could address, and, I'm here to help you guys. So make sure you guys subscribe. Shoot me an email too. We are going to be starting this next pledge class soon, so most of you guys, it's a little too late unless you did register prior and you did miss the group interview. You have like 1 day to catch up with me, but other than that, it's past that. But even then, start sending applications for the next pledge class. If you guys have any more questions about anything, holla at you, boy. Love y'all. Stay in school.